Welcome to our reverse mortgage webinar. My name is John Charbonneau. I've been a licensed mortgage specialist with TMG, the mortgage group, for over 22 years. And it will be my pleasure to walk you through the ins and outs of reverse mortgage options available here in Canada. Our webinar will be between 15 and 20 minutes long. During our program, we'll talk about why this option is growing in Canada. I will debunk a few reverse mortgage myths, or as Donald Trump would call it, fake news. I'll outline the two different types of reverse mortgages. We'll take a look at the criteria to qualify for a reverse mortgage, and then finish off our presentation with two case studies so you can see how a couple of different retirees are using reverse mortgages to enhance their retirement. In Canada, there's only one supplier of reverse mortgages, and that's Home Equity Bank. You may be familiar with some of their television advertising featuring Kurt Browning, who you see here on the left, and Donald Jackson, who is on the right. Donald is a retired professional figure skater. So why are we talking about reverse mortgages? Well, senior citizens in Canada, and we're going to define senior citizens as people 60 years of age and older, they are the fastest growing segment in Canada. At present, there are 6.8 million seniors in Canada. And over the next 10 years, that number is expected to grow by almost 20%. Interestingly enough, there are approximately 1,000 people a day turning 60 years of age, and that number is larger than the number of babies that are currently being born on a daily basis in Canada. Some good news about your retirement. There's a 50% chance that you will live to the age of 92. Unfortunately, though, for 51% of those that are going to be retiring shortly, they'll be carrying debt into their retirement. And that could be a mortgage on their home, it could be car loans, it could be credit cards, it could be lines of credit. Worse than that is that 50% of those people planning to retire are estimating that they will run out of money within 10 years. One thing we do know about Canadian baby boomers, they want to stay in their home when they retire. Clearly, 84% of them want to remain in their own home, and that's in the neighborhood that they raise their kids in, they go to church, they have their doctor and their dentist. Now, lots of them won't be able to stay in the home they raised their family in for a variety of reasons, and 91% of them said if they can't stay in the home they raised their family in, they definitely want to stay in the same neighborhood. So that's where their friends are, their doctor, their dentist, their lawyer, their accountant, they're familiar with the grocery store, etc. Now, this lady is not one of our clients. You may remember her from the TV series Golden Girls. And the reason I put her photo up here is that she represents a client that we helped not long ago, a lady whose husband had passed away. She was about 80 years old. She was living in a nice house like this on the west side of Vancouver, had a tax assessed value of about $3 million. Good news was that it was free and clear. Now, when our client's husband passed away, her income went down because he was the one that had the pension. So she was living in this nice house, but only on OAC and CPP. She deferred her property taxes, but she didn't have enough money on a monthly basis. And what she had to do, well, every Wednesday morning, she'd get up at about 4 o'clock in the morning, take her Safeway grocery cart, and she would go down the back alleys of the west side of Vancouver, going through people's recycle bins, looking for pop bottles and other things that she could take to the recycle depot and get some money on. So we were introduced to her. We helped her out with a reverse mortgage, one of two different types that are available. And she now receives $10,000 a month. And you can imagine with $10,000 a month, she can pretty well take her grandchildren on any kind of trip or cruise or event that she wants to. Next thing we're going to do, we'll talk about some reverse mortgage myths, what Donald Trump might call fake news. The very first myth is that the bank owns the home when you get a reverse mortgage. The fact is, the homeowner always maintains control of their home, and they have the freedom to decide when and if they'd like to move or sell. The title to the home remains in the homeowner's name. That does not change. Very similar to a traditional mortgage. Next myth. Those with a reverse mortgage will owe more than their house is worth. The fact is, Home equity's conservative lending practices allow clients to take a maximum of 55% of their home's appraised value out by way of a reverse mortgage. 99% of clients have lots of equity remaining, and I'll give you a couple of examples later in this presentation. Myth: reverse mortgages are too expensive because rates are high. Home equity rates are moderately higher than regular mortgages, and because there are no payments involved, they're actually more affordable from a cash flow perspective than carrying a traditional mortgage into retirement. Myth: a line of credit is a better option. Well, in some cases it might, but in a lot of cases it isn't. Lines of credit are a good short-term solution, but they do require monthly payments. The rates can go up on you unexpectedly, and they are callable, which means that they're a demand loan, and the bank can say, you no longer qualify, you owe us too much money, and we want you to pay that back. Whereas a reverse mortgage is a product for your lifetime. As long as you continue to live in the home, you can maintain that reverse mortgage. The next myth: the bank can force the homeowner to sell or foreclose at any time. In reality, a reverse mortgage is a lifetime product. As long as your property taxes or insurance are in good standing and the property remains in good condition and the homeowner is still living in the home, the loan won't be called even if the house decreases in value. So you can stay as long as you want, and that provides homeowners with a lot of peace of mind. Our next myth: the homeowner cannot get a reverse mortgage if they have an existing mortgage on their home. In fact, many clients use a reverse mortgage to pay off an existing mortgage and various debts, freeing up cash flow for other things to be able to enjoy their retirement. The surviving spouses are stuck paying the loan off after the homeowner passes away. Well, in reality, surviving spouses can choose to remain in the home without having to make a payment on the reverse mortgage unless they choose to sell the home or move out of the home and it's no longer their primary place of residence. So let's talk about the different types of reverse mortgages. There's actually two different types of reverse mortgages offered by Home Equity Bank. The CHIP reverse mortgage, where there is a single account and you receive a one-time lump sum advance on your mortgage up to 55% of the value of your home, depending on your age and the location of your property. The second type of mortgage is called an income advantage mortgage, and you can have a lump sum given to you up front, and you can have a planned advance. So you could receive $1,000 a month, for example, for a certain number of years, and we'll take a look at these two different products in greater detail right now. The CHIP reverse mortgage, this is the one-time lump sum payment. You can use that to pay out debt. You can downsize or right-size your home. As long as it's a primary residence, you can actually take the money and use it as a down payment on an investment property. We've had lots of people that, with all the extra time they have, want to spend a lot of time in the winter months down in the United States. So they've taken out reverse mortgages and use that to buy properties in Phoenix or Florida or California. You can also use the CHIP reverse mortgage to take a lump sum on the equity in your home to help out your children or your grandchildren, give them an advance on their inheritance so that they can use that money for a down payment themselves. And there's also unplanned large expenses. Possibly you want to buy a motorhome and travel across Canada and the United States. The other type of reverse mortgage, the income advantage mortgage. So this increases your monthly cash flow. It minimizes long-term tax liability because you don't have to take as much money out of your RIF, because the money from the income advantage mortgage, which is coming from the equity in your home, is totally tax-free. This cash flow can help you maintain your lifestyle with a decreased income due to you being retired. And it allows you to enjoy your retirement more because you have income to be able to do the things that you want to do. Lots of people have said, hey, we have all this extra time on our hands, we'd like to go golfing, but we can't afford the green fees. So the monthly advantage, income advantage mortgage can help with that. People also will sometimes need extra cash for expenses and home care. Situations where someone gets ill and the option is to put them into a retirement home or an extended care facility, which breaks up the family, or they can stay at home if they had round-the-clock care. So you can use the monthly income from an income advantage mortgage to pay for healthcare expenses. And then you can also pay for life events, whether it's home repairs or car repairs. So who qualifies for a reverse mortgage? Well, first of all, everyone that's on title to the home must be 55 years of age or older. They must own their current home as their primary residence, where the reverse mortgage is going to be put on, or plan to have purchase a home that will be their primary residence. And the home currently that they own might not have to be debt-free. We can use a reverse mortgage to pay off an existing mortgage. And as I mentioned, it must be their primary residence. You must have valid and adequate fire insurance in place, and your property taxes must be up to date. If you have deferred your property taxes, you'll have to back out of that program, and we can use some of the cash from the reverse mortgage to bring you up to date on your property taxes. Now, the next point is rather interesting, because to qualify for a reverse mortgage, there's no income requirement, there's no credit requirement, and there are no health requirements. So a couple of big changes or differences between a reverse mortgage and going to the bank and qualifying for a traditional mortgage. So here we have a couple of examples that we're going to show you how we've helped two different seniors enjoy their retirement more. The first person we're going to talk about is Marjorie. She's 59 years old, and she has a single family home. It has a market value of $1,050,000, and it's in the Vancouver area. Now, she, at the age of 59, wants to retire, but she does have a $318,000 mortgage on her home, and she won't be receiving OAS and CPP. But if she didn't have the mortgage payment on that $318,000 mortgage, she would have enough cash flow from her savings and retirement funds to be able to enjoy her retirement. So what we've done is we've given her a reverse mortgage. We gave her $319,495. We gave her about $1,500 more than she owed on her current mortgage, and that covers off the legal fees and independent legal advice required to get a reverse mortgage. So the graph you're looking at now shows where would she be in 16 years if she took out a reverse mortgage today for $319,000 and she didn't make any payments on it, and the interest accrued for 16 years. So you look over on the right-hand side and you'll see that her home has gone up in value from $1,050,000 over 16 years to $1,635,000. Now, where do we get that number? Well, we used an ultra-conservative home appreciation interest rate of 3%. Across Canada in the last 15 years, the average rate of increase in value is 6.47. So we think we're pretty conservative in our value. So taking the information from this graph here, let's look at the numbers on a finer detail. So on the middle column, you'll see her current home worth $1,050,000. She starts out with a mortgage of almost $320,000, and she has equity in her home of $730,000. 16 years in the future, her home is going to be worth $1.6 million. She'll owe $741,000. That's 16 years worth of no payments on the mortgage. And she'll have $894,000 in equity. So more equity in 16 years than she has today. And she's also been able to enjoy retirement starting at the age of 59. Otherwise, she might not be able to retire under traditional approaches until she was 65 or 70, because remember, she's got that $319,000 mortgage on her home. Let's take a look at another homeowner that we've helped. Tom and Jeanette. He's 67, she's 65. They're living in a strata townhome with a value of $1 million. That townhome is in Hamilton, Ontario, for example, and they were looking to get a variable rate reverse mortgage. Now, they don't have a mortgage on their home right now. They're retiring. They're getting CPP, OAS. He's getting a pension from his employer. She's getting a pension from her employer. But they said, you know what? We've got all this extra time on our hands. There's a lot of things we'd like to do. It would be really nice if we had an extra $1,000 a month. And remember that with the Income Advantage mortgage, this is a planned advance on a monthly basis. They qualified for that. And let's look at where they would be after 16 years. Again, over on the right-hand side, using a rate of appreciation, inflation if you will. Their home is going to go up in value. It will now be almost $1.6 million. They will owe $180,000 as a result of receiving $1,000 a month for 16 years, plus $97,000 in interest over that 16-year period of time. So again, coming back to the finer details, their home today is worth $1 million. They have equity of $1 million. In the future, they will have a home worth $1.6 million. They'll owe a total of $277,000, and they'll have almost $3 million in equity in the home. So in 16 years' time, they're going to have more equity in their home than today. They've had the benefit of an extra $1,000 a month for 16 years. So that's our presentation on reverse mortgages. We have all sorts of information that we can provide you with. We can take a look at where your home is, what your current age is, what the appraised value of your home is. We can estimate for you how much you could qualify for a CHIP reverse mortgage. We can estimate how much you can qualify for in the way of an income advantage mortgage. We can do some projections and show you where you would be based on what you think your home is going to go up in value over the next 16 years. We would like to offer you the opportunity to ask any and all questions that you have. We consider any question a valid and an important question. There's no such thing as a stupid question when it comes to planning your retirement. We often have seniors bring in their children into the discussion so that they can see what's happening, and we welcome that as well. You can give me a phone call at 604-818-2840, or you can send me an email at john@canadianmortgagefinders.com. I'd be happy to come out and meet with you at your home, or I can meet with you at my office, or we can just chat about some general questions on the telephone. So thanks for watching our webinar. We'll make a replay available to you, and give us a call and see if a reverse mortgage is the right thing for your retirement. Thanks for watching.